All right, so you ready to jump into this December 12th, 2024 financial time capsule?
Let's do it. Always fascinating to see what kind of insights we can pull from just, a single day's worth of data.
Yeah. It's almost like a snapshot of where we are and maybe where things are headed, right?
Absolutely.
So let's see what this snapshot tells us. Okay, so first up, we've got the markets. S&P 500 and Nasdaq, both up. A little for the S&P, but the Nasdaq jumped over 1%.
Yeah, pretty solid gains there.
But then you look at the Dow and it's down. So what's the story there? Is this tech sort of pulling away while the more traditional sectors kind of get left behind?
Well, it's not quite that straightforward. Remember the Russell 2000?
Oh, yeah, it tracks the smaller companies.
Right. And it actually dipped a little bit, too. So that could suggest some underlying concerns,
Sure.
maybe specifically in domestic markets.
So not a total tech victory then.
Not necessarily. And, speaking of tech, remember that earnings report we were talking about from insert relevant tech company, leveraging AI from listeners' personal portfolio or interests, if available?
Oh, yeah, the one that blew everyone away.
Yeah, exactly. They're so heavily invested in AI, and clearly that's paying off. That's probably a big part of why the Nasdaq is doing so well.
Makes sense. Okay, so moving on from the stock market, Bitcoin dipped a little bit, but Ethereum, that jumped over 3%.
Oh, wow.
So is this the altcoin surge everyone's been talking about?
I mean, it's possible, right? Ethereum has been getting a lot of attention lately, especially with all those applications in decentralized finance.
Yeah, it's definitely been on my radar. Speaking of things on my radar, Warren Buffett, his portfolio, has been making some headlines. And let's just say they're not exactly screaming bull market.
Yeah, Berkshire Hathaway's sitting on a ton of cash right now.
Yeah.
And those short positions, those are definitely raising eyebrows.
Okay, so break it down for me. What exactly do those short positions tell us? I know they're betting against something, but what is it?
Well, if you look closely, you'll see those short positions are concentrated in sectors that have really high price-to-earnings ratios right now. Mention specific sector or company from listener sources.
Oh, right.
That's one area where Buffett seems to be betting against the market. Their PE ratio is way above historical averages.
So even the Oracle of Omaha is feeling a bit bearish. Interesting. If he's seeing some red flags, maybe we should be paying attention too, right?
Definitely worth a closer look, especially considering your own risk tolerance. We've talked about that before. It might be time to reassess your exposure to those sectors with those really high valuations, like, mention specific sector or company from listener sources.
Okay, good point. Now, this is where things get interesting. Morgan Stanley released their predictions for next year. And, well, it's quite a mix. AI driving corporate efficiency, that's no surprise. But Dogecoin, as a legitimate asset class, that one threw me for a loop.
Yeah, that was a bit of a curveball.
Seriously. I mean, it makes you think, though, right? About the power of social trends and online communities to actually influence the markets.
Yeah, I think it's a good reminder that predictions, especially in finance, they're far from an exact science.
For sure. Okay, and then there's this. Negative interest rates. Are they making a comeback?
Yeah, well, one prominent banker seems to think so, which I know sounds crazy, right? But think about it. The Swiss National Bank just cut their rates, and the Swiss franc, it basically tanked.
Oh, wow.
Central banks, they're walking a tightrope right now, trying to control inflation without, totally killing economic growth.
Right. So negative interest rates are back on the table. What would that even mean? For someone with investments in, mention a relevant asset class from the listener's portfolio.
That's a really good question, and definitely something we should explore further.
Okay, before we do, one more thing. There's a strategist who's predicting that the S&P 500 is actually going to decline next year, and they're blaming persistent inflation.
That's a pretty bold prediction.
It is. So is this an outlier view? Or should we be taking it seriously?
Well, it definitely goes against the grain, but it's always good to consider different perspectives. This strategist prediction, I think it reminds us that inflation is a real threat, and it could definitely impact market stability.
Okay, so we've got a lot to think about already. A potentially shaky tech sector, whispers of negative interest rates, a strategist predicting a market decline, December 12th, 2024, definitely giving us a lot to unpack. But we're just getting started. You gave us some really interesting stuff on acquisitions, regulatory changes, specific sectors, ready to go even deeper.
Absolutely. Let's dive in. Okay, so let's dig into some of these specific developments you flagged. First up, we've got Agnico Eagle Mines acquiring O3 Mining.
Yeah, another big acquisition.
Exactly. And it's not just an isolated event. It actually points to a much larger trend we're seeing in the mining sector. A lot of consolidation happening.
So it's like the big fish getting bigger.
Yeah, you could say that. And, you know, the couple of reasons why this is happening now. One of the biggest factors is commodity prices. They've been all over the place lately.
Right. Makes sense.
So these mining companies, they're trying to gain some stability by consolidating. They increase their economies of scale. They get more control over resources. It's all about weathering those price swings.
So it's a strategic move. Okay, next up we have the Consumer Financial Protection Bureau, the CFTB, stepping in to regulate bank overdraft fees.
Oh, yeah, that's a big one.
It sounds like it could have a pretty significant impact for consumers, right?
Absolutely. I mean, the CFPB estimates that this new rule could save consumers a collective $5 billion annually.
$5 billion. Wow. Okay, that's a lot of money.
Right. That's a lot of money going back into people's pockets.
Yeah.
Which, you know, could actually have a ripple effect on the economy.
Right, it could stimulate spending in other areas. Interesting. Okay, so we've looked at some overall market trends. We've talked about a couple of specific developments. Now let's zero in on those key sectors you mentioned: technology, energy, and finance.
Yeah, those are always some hot topics. And each of these sectors, they're going through some really big changes right now, which, of course, you know, presents challenges, but also opportunities for investors. Let's start with technology. The Nasdaq 100. It's about to undergo this major reconstitution. Potentially 11 companies joining the index, others getting the boot. You know, you mentioned a relevant Nasdaq 100 company from the listener's portfolio, if applicable.
Oh, yeah.
Yeah, and so this reconstitution, it could actually directly impact your holdings.
Yeah, good point. We'll have to keep an eye on that. So what's driving this whole shift in the Nasdaq 100?
Well, a lot of it has to do with innovation. The landscape is constantly changing, and the index needs to reflect that. AI is obviously a huge factor. Right?
No doubt.
I mean, it's revolutionizing so many industries. Software development, healthcare. We even saw how relevant tech company leveraging AI from listeners' personal portfolio or interests, if available, used AI to boost their earnings.
It's everywhere.
Yeah. And then there's cloud computing. More and more businesses are moving their operations online. And you can't forget about cybersecurity. As we become more interconnected, more reliant on technology, cybersecurity becomes absolutely critical.
Right, so it's like a three-pronged attack: AI, cloud computing, and cybersecurity.
Exactly. Those are the forces shaping the tech landscape. Okay, let's shift gears to energy. You know, it's always this interesting push and pull between tradition and innovation.
Yeah, definitely.
And right now, the push for renewable energy is really intensifying.
Yeah.
Driven by, you know, climate concerns, the desire for energy independence.
Makes sense. But traditional energy sources, oil and gas, they're still in the mix, right?
Oh, absolutely. They're not going away overnight.
No, not at all. So this whole transition to renewables, I have to imagine it's creating some interesting investment opportunities.
It definitely is. The key is to identify those companies that are well-positioned to capitalize on this shift. So, you know, are you more interested in those established energy companies, the ones that are adapting to this new landscape? Or are you thinking about those newer players in the renewable space?
That's a good question. Food for thought.
Definitely something to consider. Okay, lastly, let's talk finance. We were just discussing the possibility of negative interest rates making a comeback.
Oh, yeah, that one.
If that does happen, what kind of impact could it have on the banking sector?
Yeah, good question.
Well, if rates do go negative, it could really squeeze banks' profitability. Traditional lending models don't work as well in that kind of environment. So banks would need to find new ways to generate revenue.
Right, so it's like adapt or die.
Pretty much. And banks are actually already taking steps to prepare.
Oh, really?
Yeah. A lot of banks are partnering with fintech companies. You know, those are the startups that are disrupting the financial industry. Banks want to leverage that agility, that innovation, and the rise of digital banking. That's another big trend. It gives banks new ways to connect with customers and, you know, make money.
Makes sense. So we've got a tech sector that's constantly evolving, an energy sector that's in transition, and a financial sector that's bracing for potential upheaval. It's like it's all connected.
It is. Remember how we talked about the Swiss National Bank cutting rates and how that sent ripples through the global markets?
Yeah.
Well, that depreciation of the Swiss franc.
Yeah.
It could have a real impact on European exports.
Oh, wow. So it's like a domino effect.
Exactly. What happens in one part of the world can have these unintended consequences elsewhere, which is why diversification is so important.
Right. You don't want to have all your eggs in one basket.
Yeah.
Especially when it comes to geography.
Exactly. You want a portfolio that can handle those regional ups and downs, because inflation and central bank decisions can vary so much from country to country. So we've covered a lot here: market trends, expert predictions, company news, insights into specific sectors. What stood out to you the most so far?
Wow, it's amazing how much we've uncovered from just this one day.
Mhm.
December 12th, 2024, market trends, predictions, even Dogecoin. But I think the important thing is, what can we actually take away from all of this? Like, how do we use this information to make good decisions about our own investments?
Absolutely. And it's easy to get lost in the details, right? But it's about finding those key insights, the things that can really help you navigate the markets and make smart choices for your portfolio.
Right. So, like, what are those key takeaways? What should our listener be thinking about?
Well, one of the biggest themes that's emerged is that everything is connected.
Mm,
If you think about it, we talk about Warren Buffett's moves, the Swiss National Bank's rate cut, even things like that. Strategists predicting the S&P decline. They might seem like isolated events, but they're all part of this complex web.
yeah, it's like a giant financial ecosystem.
Exactly. And what happens in one corner of that ecosystem, it can have ripple effects throughout the whole thing. So understanding those connections is crucial.
Makes sense. So, back to diversification again, right? Like spreading those investments around.
Exactly. And, thinking about your interest in mention a relevant asset class or sector from the listener's portfolio, it might be worth considering how these global events could impact your holdings. Maybe there's some adjustments you want to make to manage your risk.
Right, right. So, don't put all your eggs in one basket.
Exactly. Spread them around, manage that risk, maximize those opportunities, because the landscape,
Yeah.
it's constantly evolving.
Yeah.
So you got to stay flexible.
Okay, so we've talked a lot about what's happening right now, but I'm curious about the long game. Like what's the big picture? How do you see these forces we've been talking about, AI, inflation, global economic shifts? How
Yeah.
do you see those playing out in the years to come?
That's the million-dollar question, right?
Mm.
And honestly, it's impossible to say for sure. But I think one thing's for certain: these forces, they're not just isolated events. They're all intertwined.
Hmm.
And how they interact, how they evolve, that's going to shape the investment landscape for years to come.
It's almost like a tapestry. You've got all these different threads woven together, and it creates this intricate pattern.
Yeah, exactly. And it's that pattern that we need to try to understand.
So it's about seeing the big picture, understanding those connections, and being ready to adapt as things change.
Exactly. Who knows? Maybe Dogecoin will be leading the charge in 5 years.
Well, we'll have to wait and see about that one. But seriously, there are so many exciting opportunities in the world of investing, especially for those who stay informed and adapt to the changing market
Couldn't
dynamics.
agree more.
Well, that brings us to the end of our deep dive into December 12th, 2024. We covered a lot of ground today. Hopefully, you've gained some valuable insights. Things you can use to make informed decisions about your own financial journey.
Remember, knowledge is power, especially when it comes to finance.
So stay curious, stay informed, and until next time, happy investing.